Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. Well, it is a steady start to this series as well. After October saw Nifty logging about 4% gains as well. If you look at the headline numbers, Sensex up about 350 points. Nifty is also doing well, steady above that 26,000 mark as of now. But yes, financials, that is once again steering the rally ahead. And you can look at the Bank Nifty index showcasing a gain of about 0.3%. So yes, apart from Bank Nifty, you can see energy and metal pockets have also seen strong buying interest. If you look at Nifty Energy Index with about 0.5% gains coming in from there, 2% gains coming in from there. On the other hand, if you look at Nifty Metal Index also showcasing a gain of about 2% each as well. So both the indices on a strong footing as of now. But yes, the weakness seems to be emerging from the auto space because they are seeing a bit of a cool off and nearly a percent decline coming in from the auto space. Otherwise, all the sectors are looking like in the positive territory as of now. But yes, coming to the Nifty IT Index, that is also showcasing a 0.5% gain as of now. Consumer durables have been doing well. If you look at Nifty Pharma Index, also showcasing a gain of about 1% as well. On the other hand, if you look at the broader end of the markets, mid-cap and small-cap, both of them have been doing well. 0.3% gain coming in for each. Mid-caps, once again, now as well. On the other hand, if you look at the top Nifty gainers and losers, let's take a quick look at that. Power Grid towering the trade with about 3% gains. Adani Enterprises, majority of the Adani Group stocks have done well, given that the September quarter earnings that came out of Adani Total Gas also and Adani Green Energy, which has impressed the street, and that is why you can see some buying interest coming in from there as well. Adani Enterprises showcasing a gain of about 3%. Adani Ports with about 2.5%. JSW Steel also reacting well to its second quarter results, where profit jumped about fourfold, and that is why you can see a gain of about 2.6% as well. NTPC and Tata Steel, some of the other gainers on the Nifty 50. However, on the flip side, you can see Dr Reddy's seeing a cool off after the 3-day rally, 3.5% cut coming in for Dr Reddy's. Coal India showcasing a downtick of about 2%. Other than that, M&M, Maruti Suzuki, some of the auto stocks taking a backseat today with about a percent decline. And Bharat Electronics also not doing well for this third consecutive trading session. But yes, now let's go across to understand how the market setup looks like and what the last minutes of the trade look like. I'll go across to my technical expert of the show. Joining me is Osho Krishan, Senior Analyst, Technical and Derivative Research at Angel One. Osho, good afternoon. Nifty now finally steady above that 26,000. Positive start to the November series. Can this week be the time when we get Nifty to an all-time high then?
Very good afternoon, Lovisha. Firstly, thank you for having me at the show. Well, yes, no doubt we have seen a very positive momentum in the benchmark and the key indices, and the month of November have already started on a firm note. So I'm expecting that from here onwards, as the undertone is on the positive front, so there is a high possibility of a breakout from current levels. So for Nifty 26,100 is still a kind of intermediate hurdle, as call writing has been seen decently around the zone of 26,100. So once we breach the zone of 26,100, then from here onwards, Nifty can see some kind of strong momentum, and we can definitely retest or reclaim the lifetime highs. From here onwards, 26,300 and 400 is the next potential target for Nifty, while on the lower end, 29,500 and 25,800 is very strong support levels. So still we have a buy on dip kind of an approach in key indices. Any dip towards 25,900 should be auguring well for the buyers, and any breakthrough above 26,100 can also be seen as an aggressive buying position at higher levels. So I'm expecting that in the coming session, there is high potential for the counter to give a breakout from current levels, and we can reclaim the lifetime high levels within 1 to 2 trading sessions.
All right, within 1 to 2 trading sessions, we can go there to the lifetime highs. That's a positive statement coming in, Osho. Osho, let's also discuss about Bank Nifty Index doing well in today's trading session. Nearly 0.4% gains coming in from the Bank Index as well. But anything on a levels front that we can wash out from this Bank Nifty Index?
Again, for Bank Nifty, again, the view is bullish. I am expecting any kind of dip towards the zone of 58,000 should be auguring well for the buyers. On the higher end, there are some of the developments that the technical oscillators are already overstretched in Bank Nifty. So at current levels, the risk reward is not very strongly favorable, but undertone still seems on the positive front. So 58,000 should be seen as an buying opportunity. On the higher end, 58,500 has decent amount of writing. and that can be seen as intermediate hurdle for Bank Nifty. But once it breaches the zone of 58,500, then from there onwards, 58,800 to 59,000 can be the next level that one can expect in the counter. But as it has already deviated strongly from the short-term moving average, so I'm expecting that in the short-term period, there might be some cool off or consolidation that can be seen in the banking index. Although the undertone is positive, but one should maintain exclusivity with stock selection rather than focusing much on Bank Nifty index.
Let's get in your view on the Nifty Metal Index also, because the sector has been performing well for the 6th consecutive session. And can we expect more gains going ahead? And what are you finding attractive from current levels from this space?
Nifty Metal had already gained approximately 4.5% in the week, and majority of the heavyweights like JSW Steel, Jindal Steel, Tata Steel, all the counters are looking very positive, and as they have given a fresh breakout from current levels. So from here onwards, there are various counters which are looking very positive to me. Firstly, JSW Steel has given very strong breakout, so I'm expecting the momentum can be seen to be continued on the higher end because there has been a consolidation breakout in JSW. So near about 1180 was the zone where the breakout was expected in the last trading session, and today we have witnessed a follow-up buying in emergence in the counter. So overall, the technical structure remains on the positive front, but any cool off towards 1180 can be seen as a buying opportunity. And with the kind of setup that it has formed, 1230 to 1240 will be the immediate target that one can expect. So now the trading range has moved higher, 1180 as a support level and near about 1240 as the resistance level that can be seen with JSW Steel.
Okay, all right. Those are the something metal counters that we need to watch out for. But yes, today the stock that has been in focus, that is your AMC stocks, HDFC AMC, UTI AMC, Nippon India AMC, all of them fell up to about 10% in today's trading session after SEBI proposed a lowering of expense ratios, which is charged by the mutual funds. The regulator has also proposed lowering of the cap on the brokerage fees, which is paid by the mutual funds for cash market transactions. And Jefferies believes that a 5 basis point cut in equity exit load related charge can impact the profits of these AMCs by about 8 to 10% if implemented in FY27. Osho, definitely a sentimental reaction for a majority of the AMC counters, but on the charts, what can we foresee going ahead?
See, definitely, as you have mentioned, that majority of the AMC counters have seen some kind of jerk reaction because of the expense ratio news. But overall, the technical structure for majority of the AMC counters is still on the positive front. But looking at the recent developments, there has been decent rally in majority of the AMC companies. So HDFC AMC, for instance, has seen a very strong rally after the breakout from the zone of 4,600 and has surged near about the zone of 6,000. And in the last 5 to 6 trading weeks, there has been a strong consolidation. So such kind of news can provide some kind of cool off or an opportunity to book positional positions in the counter. And for aggressive traders, one may look for even selling opportunities, although the technical setup is still on the positive front, but only from a momentum point of view, one can look for selling opportunity in majority of the AMC counters. Although on the lower end, again, I am having a bullish approach, but there might be some kind of profit booking that can be triggered in a short-term point of view. So for HDFC AMC, 5100 is the zone. If it tests the zone of 5100, then one can look for buying opportunity. And at current levels, aggressive sellers can even short positions for 5100 as a target.
Okay, all right. But yes, book some losses if there is any for a majority of the AMC counters. But yes, coming to another stock in focus, that is your Shree Cements. Well, the stock did well today. 2% gains coming in for the counter after the Q2 performance showcased that the profit has nearly trebled and revenue has also grown in double digits. But brokerages have given a mixed verdict on the counter, saying that the company's constant focus to push premium products have impacted volumes. And over the past 6 quarters also, the company has seen flattish volume growth. Osho, coming to you, how does the stock look like on a medium-term basis for you?
Technically, the counter is still into a verge of consolidation, followed by negative biasness, as there has been lower lows, lower highs formation on the daily and weekly time frame chart structure. So once it breaches the zone of 29,700 on a decisive manner, then only we can look for some buying opportunity. Till that time, better to stay sidelines from Shree Cement. Other counters from the cement space is looking better to me, but for Shree Cement, better to wait for 29,700. If it closes above the zone, then one can look for buying opportunity from a short to medium term point of view.
Okay, 29,700 zone, that is what the next target could be. All right, let's move on and talk about Suzlon shares because that has also seen a good traction throughout the day. 3% gains coming in for the counter after the company approved the appointment of Rahul Jain as the Chief Financial Officer, and that is effective from December 15 onwards. Now, Jain recently has resigned from his position as a Group CFO at SRF, where he spent nearly 17 years. So the street seems to be appreciating this movement, and that is why you can see about 3% gains coming in for the counter. Osho, but what does this stock look like on the charts? Because the stock has been in consolidation zone for some time now.
In the last two trading sessions, the counter has regained a strong movement, approximately 8% in last two trading sessions. That has been backed by very strong volume. So I'm expecting that on the higher end, from here onwards, there is a strong possibility for a counter trend in Suzlon. Although the immediate hurdle or immediate target from a very short-term point of view is near about the zone of 60, followed by 60.50. If it breaches the zone of 60.50, then we can see some kind of continued momentum for the targets of nearly 66 to 67 from a short to medium term point of view. Overall, there is a possibility of counter trend. So for those who have already taken position, should definitely hold the counter from a target point of 66. For those who want to have a fresh position, it's better to wait for some kind of cool off towards the zone of 56, 55. That will be a decent level to start accumulating the counter, and 66 will be the positional target for Suzlon.
Okay, all right. 60 levels that we need to watch out for Suzlon Energy, and we'll watch out the counter as well. Let's talk about DCM Shriram because the stock did well in today's trading session, but it's off its day's high level as of now, given that the company has reported a strong set of numbers for the September quarter, which was aided by some improved performance and recent acquisitions as well. But yes, coming to the number-wise, net profit that has more than doubled in the second quarter. Revenue has also grown by about 11% on a year-on-year basis. EBITDA has surged by about 71%. And the company has said that the year-on-year improvement was primarily driven by the acquisition of Hindustan Specialty Chemicals as well. The company also plans to acquire a salt works unit for about 175 crore rupees as part of its backward integration strategy. However, the stock from its day's high level has cooled off, and it's showcasing a gain of about nearly 1%. But Osho, what's the next target we can watch out here for DCM Shriram?
See, again, this counter have seen good movement in the last three trading session, although the volume has been picked up in today's trading session. So I'm not very much strongly bullish in the counter because this was into a very strong consolidation phase. But looking at the recent development in the last three trading session, there might be a possibility of further continued momentum. So on the higher end, the very strong hurdle is placed around the zone of 1380. So once it breaches the zone of 1380 on a decisive manner, then one can look for accumulation in the counter. Or if the counter sees a kind of a sell-off or a further correction towards the zone of 1250, 1260, then that will be a decent level to start accumulating the counter. So overall, the trend is sideways to bullish, but one should wait for either dips or a breakout for start accumulating the positions in this counter.
Okay, all right. That is the view coming in for DCM Shriram. Let's also address one of the stock, that is your Varun Beverages. The stock is in focus and it is about it as it's at its day's high level after the company reported a steady third quarter numbers. The company has reported a 20% rise in 20% year-on-year rise in its profit figures. In addition, the company has announced some plans for its business expansion. They've said that the company has announced that its African subsidiaries will enter the market for beer through an exclusive distribution agreement with Carlsberg breweries. And in addition, the company has also added that its snacks facility in Morocco has completely ramped up its own full-scale operations. Right now, you can see the Varun Beverages with about 9% gains as well. Osho, what can we watch out for the counter going ahead? Good gains coming in for today.
Yes, definitely. There has been very positive development. There has been a strong volume on base of which the counter have seen some kind of strong momentum. But from a longer term point of view, the 200 simple moving average still portrays as a very strong, sturdy hurdle. So if there will be a follow-up buying for another session in the counter and it hovers above the zone of 500, 505, then only there is some possibility of counter trend in this counter. So I expect the zone of 505 is a very sturdy hurdle, and one should wait for a conclusive breakout above 505. Then only we can look for a positive momentum coming back in this counter.
Okay, all right. That's Varun Beverages for you. 9% gains coming in for the counter. Good moves after its third quarter numbers as well. But yes, let's move on and talk about sugar stocks because they have been doing well, given that the center is proposing that it will allow exports for the marketing year of 2025 to 26. As a result, we have seen Bajaj Hindustan, Sri Renuka Sugars, Triveni Engineering, Dwarike Sugar, all of these counters have been seeing good momentum in today's trading session. But from going ahead, Osho, what is your view and anything that you're liking from the sugar sector?
Yes, CID Parry is one of the counter which is looking very positive to me. There has been a strong consolidation breakout in the last two trading sessions. The volume has also picked in the counter. So I expect the momentum can be seen and further strengthening in this counter. On the higher end, immediate target is seen around the zone of 1160, while on the lower end, there is very strong support around 1040. So one can take long position in the counter for 1160 as a immediate target from a short-term point of view.
Okay, all right. Let's move on and talk about Bosch because that stock is seeing a fall of about 3% after the company said that they see potential supply chain disruptions which could impact its operations as well. The development stems from the ongoing situation which is surrounding Nexperia, one of Bosch's key suppliers of electronic components, and that is why you can see the negative sentiment playing out on the counter as well. But Osho, coming to you, the stock has been consolidating in the higher zone, but can we expect any more downside from the current levels?
Looking at the recent development and followed by consolidation in this counter, there is possibility of some further correction or cool off from current levels. So on the lower end, I'm expecting support near around the zone of 35,400. So that can be seen as intermediate support for the counter. From here onwards, there is high possibility of further continuation on the profit booking side. So better to exit position if already have a long position, or wait for dips around the zone of 35,400 to start accumulating position from medium to long term point of view.
Okay, all right. Let's talk about one of the top Nifty losers today. That is your Coal India after it came out with its second quarter performance. Well, the company has, reported Q2 numbers which is lower than the street estimates on majority of the parameters. If you look at the revenue for the quarter, that has declined by about 3%. Net profit has also stood at about 4263 crore rupees. EBITDA has just decreased by about 22% on a year-on-year basis, and margins have seen a sharp deterioration of about 500 basis points. But yes, Osho, the stock is at days low level and 3% decline coming in for Coal India. What can we expect next?
Technically, the counter have seen very strong resistance around the zone of 395, 397 on the weekly time frame chart. And from those levels only, we have seen the correction to get started in this counter. So for now, the range for Coal India is near about 372 on the lower end and near about 395 to 97 on the higher end. So it is expected to hover in between the range. 370, 75 should be seen as a buying opportunity. And until we see a decisive breakthrough above 395 on a weekly closing manner, till that time, better to approach this dip as a buying opportunity. Any dip towards 375 can be seen as buying opportunity, and any bounce towards 395 can be seen as profit booking zone or even a short position for aggressive traders.
Okay, all right. Let's move on and talk about V-Guard Industries. The stock is doing well after the company reported a steady September quarter performance. Net profit has risen by about 4%. EBITDA is, however, down by about 1% itself. And for the first half of FY26, the company's consolidated revenue is up by about 1.3% on a year-on-year basis. The stock is doing well, decently well. 1% gains coming in for there. But yes, Osho, how does the stock look like? Because the stock has picked up some good momentum from October lows as well, and 9% gains coming in from there itself.
Yes, there has been very linear development, linear positive movement in the counter near from the zone of 350 and has given a breakout around the zone of 375, which was a major hurdle for the counter. And now from the past two trading sessions, the counter is maintaining on the higher ground. So I expect that from here onwards, there is a strong possibility of continued momentum on the higher end. Now, any dip towards the zone of 370 should be seen as a buying opportunity, while on the higher end, the next potential target for the counter is placed around the levels of 400. So for short-term point of view, one can look for buying opportunity in the counter for 400 as a target, 370 as a buying zone, and 365 as a stop loss for the counter.
Okay, all right. Let's move on and talk about Adani Group stocks because they've done quite well today. We did see Adani Total Gas also doing well in today's trading session. Adani Green coming out with its second quarter performance, and that is where you can see about 11% gains that is coming in for Adani Green as well. But yes, any of the Adani Group companies that you like, and how do they look on the charts, Osho, for you?
Yeah, after a very long period, there has been some kind of positive traction in Adani Group companies, especially specifically Adani Green has seen a very strong momentum that has been backed by very strong volumes. But historically, also this kind of momentum has been failed to have a follow-up buying attraction from current levels. So during the month of September, once we have seen such kind of momentum that was backed by volume, but again the counter have seen some kind of correction from the higher end. So better to wait for a follow-up buying traction in Adani Group companies. If it happens, that too on the basis of on the back of volumes, then one can look for buying opportunity in majority of the counters. Some of the counters like Adani Power is still looking positive to me. There is a strong potential momentum that can be seen from a medium-term point of view. So majority of the counters should require different kind of a strategy. For Adani Power, I'm expecting a target of nearly 185, but from a short to medium-term point of view.
Okay, all right. All right, let's move on and talk about Blue Dart because the stock has been doing quite well. 20% gains, and of course, upper circuit, that is where the company has hit. We did see some good numbers coming in from the second quarter. Net profit risen by about 31%. Revenue also up by about 7% on a year-on-year basis. Osho, a good breakout on the charts today we have seen for Blue Dart. What can we eye next?
Yes, definitely. There is very strong breakout for after a very long period of time. The counter have emerged above the 200 simple moving average, which was placed approximately around the zone of 6,200. So from current levels, it is expected to continue on the higher end. The immediate target that one can expect in this counter is hovers around the zone of 6,900 to 7,000. So that will be the intermediate target from a very short-term point of view, while any dip towards the zone of 6,200 can be argued well for buying opportunity in the counter. So from here onwards, one can look for buying opportunity in the counter and with a bullish biasness in Blue Dart.
Okay, bullish bias for Blue Dart. Let's move on and discuss about another stock which is doing well today. That is your Apar Industries. 4% gains coming in for the counter after the company reported steady Q2 performance as well. Of course, we have seen that from a number basis, net profit has risen by about 30% on a year-on-year basis. Revenue has increased by about 23%. EBITDA has also grown to about 30% on a year-on-year basis, and margins have improved slightly to about 8.1%, reflecting some steady demand in the counter as well. For the first half of FY26 also, Apar has posted its highest ever yearly revenue for the first half of the fiscal year. But yes, coming to you, Osho, Apar Industries, how do they look on the charts for you?
Very positive. The counter have seen a very strong momentum in the last three trading session, and there has been continuous spike in the trading volume. Today, there has been tremendous surge in trading volume. So I'm expecting that the intermediate or the next potential target that one can expect in this target in this counter is near about 9,700. And once it breaches the zone of 9,700, then from there onwards, we can see a decisive surge towards the zone of 11,000 kind of a zone from short-term point of view. So overall, the trend is very positive and one can look for buying opportunity in this counter.
Okay, all right. Let's discuss about Raymond Lifestyle as well, given that the company did come out with its second quarter performance. And you can see that the company has reported a net profit which has risen by about 78% on a year-on-year basis. And if you look at the revenue has also grown by about 7% on a year-on-year basis. EBITDA has also increased. However, margins have come in slightly lower at about 12.3%. In the second quarter. However, Raymond Lifestyle today, however, it's showcasing a gain of about 4%, a percent at this point of time, nearly 0.5% or so. But yes, Osho, coming back to you, Raymond Lifestyle, how does it look like on the charts?
See, again, the counter is into a strong consolidation zone. It is hovering near the cluster of moving average, and the 200 the simple moving average still provides a kind of a sturdy hurdle for the counter. So I expect once it breaches the zone of 1250 on a decisive manner, then only we can see some kind of continued momentum on the higher end. For now, this might be an early signal of reversal or a bullish trend to get started, but one should wait for 1250 to get to start accumulating for positions from short to medium term point of view. If it happens, then the next potential target will be seen around the zone of 1330 followed by 1350 from a short term point of perspective.
Okay, all right. That is the view coming in for Raymond Lifestyle. Let's discuss about Radico Khaitan as well. The stock, however, is not doing well, but the company did come out with its second quarter performance, which was quite good. If you look at the net profit figures, they've risen by about 72% on a year-on-year basis. There are some improved margins, premium product sales, and of course, the stable raw material cost that has also led to the bottom line performance. Revenue has also risen by about 34% on a year-on-year basis. EBITDA has increased by about 45%, and margins have also expanded. However, the stock is not reacting well at day's low level, nearly a percent decline coming in for there. Osho, what would you recommend investors to do? Accumulate at this decline?
The counter has seen a very vertical kind of a rally from the zone of 2950 towards the zone of 3350. So there is a possibility of further profit booking in the counter. Technically, the parameters has been overrestricted. So one should wait for further correction towards the zone of 3050 to 3020 kind of a zone. If it happens, then one can look for buying opportunity because overall the technical structure is still very positive with higher highs, higher lows kind of a formation. But at current levels, better to avoid the counter. Any dip towards 3050, 3030 can be seen as a buying opportunity from short-term point of view.
Okay, all right. All right, just one last question before we let you go, Osho. Anything that you're watching out after the second quarter of numbers? And of course, what would your top picks be?
Some of the counters which are looking positive to me based on technical and derivative data is first one is from the railway space. Titagarh is looking very positive to me. It has given a fresh breakout and there is a strong potential movement that one can expect in this counter. On the derivative front, we have seen some kind of strong long build-up in this counter. So one can expect decent movement in the coming 1 to 2 trading session. On the higher end, 945 is the target that one can expect. While on the lower end, 885 is the intermediate support, which can be seen as a stop loss in the counter. While from IT space, one of the counter which is looking very positive to me is Infosys. It is on the verge of giving a fresh breakout, so one can look for buying opportunity in Infosys. It is forming a flat pattern, and I'm expecting that once it breaches the zone of 1520 on a decisive manner, it can test the zone of nearly 1590 to 1600 in a short-term point of view. So one can look for buying opportunity in Infosys, keeping a stop loss of nearly 1480.
Those are the stocks that we need to watch out for. But with that, we have to let you go, Osho. Thank you so much for your time and joining us.
Thank you so much for having me at the show.
All right, let's take a quick check of the markets of where we stand as of now. Of course, 2 minutes to go before we go to the close. But yes, if you look at Sensex, it's still steady above that 26,000 mark as of now. Sensex is, Nifty has been steady above that 26,000 mark as of now. Sensex is also doing well with about nearly 400 points gain. So both the headline indices have been, doing well at this point of time. But yes, apart from the auto index, which is showcasing some pain in today's trading session, 0.5% decline coming in from there. All in all the sectoral indices have been trading in the positive territory. If you look at the Nifty Energy Index, that is exhibiting gains of about 2%. Nifty IT Index showcasing a gain of about more than 0.5%. Nifty FM Pharma also doing well with about 0.8% gains. And if you look at the Nifty Bank Index also doing well with about 0.4% gain as well. Nifty Metal Index also oozing a gain of about 1.5%. And of course, it's the 6th consecutive trading winning streak for the Nifty Metal Index as well. All in all, if you look at the broader end of the markets, the mid-cap is once again reclaimed those 60,000 levels. Small caps also doing well with about 0.5% gains itself. So all in all, it's a good set of the markets that we are here. And let's take the final rates of where we close. Of course, it's 26,000. We are finally above that. And like we were talking about with the earlier expert in the show, where he said that it's just 1 or 2 trading sessions away when Nifty could attain those lifetime high levels as well. So we'll watch out for that. Of course, we have FOMC meeting, which is due to tonight as well. Consensus on the street has been that the Fed would opt for a 25 basis point rate cut. Whether or not that would cheer on own market markets is something that we'll be watching out for. And of course, tomorrow is the key day when we can also see whether or not we can, go and near towards the all-time high levels as well. But yes, 0.5% gains coming in for the Nifty, 133 points uptick for the Nifty. Sensex also doing well with about nearly 400 points gain coming in for the Sensex as well. So all in all, it is a positive setup for the markets. If you look at the top gainers on the Nifty, NTPC with about 3% gains, Adani Ports, Power Grid, Adani Enterprises, all of them showcasing a gain of about 2 to 3% each. On the other hand, if you look at the top losers on the Nifty 50, Coal India, after its muted second quarter performance, has not done well, 2.5% decline coming in for there. Dr Reddy's Lab taking a pause after the 3-day rally with about 2% cut. M&M also not doing well. Eternal and Maruti Suzuki also dominating some of the top Nifty 50 losers as well. But yes, let's go across to understand how the market looks like and how you should build your portfolio in a market like this. Joining me is Kunal Valia, founder of StatLane. Kunal, today we have closed above that 26,000 levels for the Nifty. So can we see all-time high levels soon?
Definitely bullish in terms of the momentum that we have seen in the market, given that the tariff bill is likely to take place sooner than later. So yeah, there is momentum in the market which can take us higher, but we need to be cognizant of the fact that there are quite a number of factors which can keep the market on tenterhooks as well. One, the trade deal taking more time than what we feel like it should happen by December. If it doesn't happen, then there could be some kind of a pullback in the markets. Secondly, as you know, the valuations continue to be reasonably high despite domestic Indian markets not going anywhere for last 12 to 15 months. And we are seeing continuous FII selling. Year to date, we have seen numbers like almost 3 lakh crores of selling of FII, and the liquidity getting pulled into a lot of IPOs. So these are the factors which are keeping the market from going to new highs. But I think the momentum is in place, and any good announcement on the trade deal will definitely take us to a new high.
Okay. Kunal, let's talk about the AMC stocks today because they took a nosedive on the SEBI's new proposal. What is the kind of impact are you estimating in terms of EPS? And do you think that this drastic reduction in brokerage caps that is laid down in the consultation paper should have been more gradual in nature?
The consultation paper, SEBI, is a welcome one. There are two sides to this. The positive side from an investor standpoint is the bringing down the expense ratios or rationalization of expense ratios for them. So it's obviously positive, and anything which is positive for investors, we have seen in so many years, last 15, 18 years, the exit load was taken away, the commission structures were coming down, then the expense ratios came down, and so on and so forth. And we have seen the number of investors coming into mutual fund have only grown. So I think even in this round, I think since it is beneficial for investors, so it is a proposal as of now, we think it is going to be beneficial for investors in short, medium and long term, and definitely the wealth creation process which the mutual funds have supported for Indian savings is going to go a very, very long way. The immediate impact will definitely be on the margins of asset management companies. We estimate that there will be 10 to 15% hit on the margins of these companies, given like 10 to 20 basis point of expense reduction. More importantly, we have to note that there is going to be a second order effect as well. Once the expense ratio comes off, a lot of wealth management firms which are listed on the exchange, which carry a very large mutual fund book for their clients, they definitely are going to impact their margins as well. So that will be one critical impact which we need to note. On the other side, we feel that something which is not right is bringing down the brokerage from 12 basis points suddenly to 2 basis points. I think it is undermining the value of research, which many large broking companies are able to provide to fund managers, which enables them in sound decision making as well. So I think over time, given that it's consultation paper right now, possibly we will arrive at a more balanced view on that aspect. But overall, to answer you precisely, 10 to 15% impact on margins is very, very likely.
Okay, 10 to 15% impact on margins. Right, Kunal, let's also talk about the second quarter earnings season. What is it, fair for you? I mean, does it make you more convinced that the second half would be poised for a double-digit growth?
Definitely makes us believe that the Jan results Jan 2026, we will see a very good results coming out of Q3 from the domestic companies. But so far, so good. The results have been in line with what we had estimated. We are again seeing a very single-digit growth from earnings side as well as the PAT side. Consumption and IT continue to disappoint us. Metals we have seen has done reasonably well. Banking has done reasonably well. Some of the PSU banks have delivered better than what we were expecting. Pharma companies, again, a mixed bag. Same is the case with industrials. So all in all, I would say single-digit earnings growth is expected once the entire results are out.
Okay. Kunal, coming back to your PSU banking point, of course, they've made a great comeback in just the past 2 months itself. So what can drive the sector's re-rating forward?
I think the increase in FDI limit is something which is a big talking point right now. Whether it comes through the system which has been proposed or talked about is something we have to see. Given that it's a very, very large decision for the government to increase the cap from 20% to 49%. I think it will take a little bit of more back and forth. But if that goes through, I think there would be substantial re-rating of public sector banks. And that's what is getting priced into the PSU stock price performance right now.
Okay. Kunal, coming to the metal space, there's plenty of exuberance. So far this year also, the metal counters have done quite well. So can we see more of an upside, or majority of the positives have already been priced in?
In this case, we always look back to what we thought last year. We thought pharma should do well, IT should do well, and so on and so forth. And 1 year down the line, we see exactly opposite of that. So we would be a little bit cautious of the metal cycle right now, given that many of the metal prices are at stock prices are at 52-week high and even getting higher and higher. We would be a little cautious about the metal rally right now. We would rather focus on something which has not worked in last 1 year. And there are definitely catalysts relating to consumption, catalysts looking forward to IT has become so undervalued right now. And in fact, it is one of the sectors which has not done anything in the last 3.5 years. So we would rather take our money out of metal slowly over next 2 to 3 months and move towards IT and consumption.
Okay, all right. Kunal, what about the defense counters? I mean, we did see a good momentum, but right now, the majority of the defense counters have cooled off. How are you placed on the valuations? And of course, from a growth visibility point of view, how are you positioned there?
Consistent worry with domestic defense companies has been the execution capabilities. While the order books are running bigger and bigger every passing quarter, but the speed at which the execution is taking place is something which we need to be careful about. However, we see defense as I would say, a decadal story right now. We understand the valuations of these companies are extremely high. At a group level, it is like trading at 50 times, 60 times some of the companies. But given the order book, given the focus of the government on becoming more Atmanirbhar when it comes to defense as a strategy, I think that's a sector which cannot be ignored for long. Any correction in the sector, we would be definitely adding to the portfolios.
Okay. Coming to your IT point, where you said that you are convinced about the IT growth story, but what is driving the conviction from there? Because we're still seeing quite flat revenue and margins and a single-digit growth as well. So what makes you more convinced about the sector going ahead?
A lot of the bad news on the sector is behind us. We have heard about layoffs. We have heard about AI taking over in a big way, where India has not been up to the mark when it comes to spending and developing something on our own. But I think a lot of negatives have been priced in. Some of the areas where IT is going to see is definitely the currency, which has been weakening, which is going to add as a catalyst to the numbers over time. Secondly, there are some big ticket deals which some of the companies have been able to get through easily, despite a very, very difficult environment. Third is that globally, Fed is going to cut rates to raise the monetary policy outcome. And we expect at least 2 to 3 rate cuts going ahead in the next 6 months from the Federal Reserve, which will enable some kind of a cycle on the IT side from the developed markets as well, which again is going to lead to a reasonable good size of business deals for the domestic IT companies. And buyback is one thing which I think will continue over the next 12 months from some of the IT companies where the companies' things are very, very undervalued. So these are the few catalysts which we think will do well for IT companies as a whole. But yeah, it is going to be a lot more patience game than what we have seen with some other sectors.
Okay, all right. You did mention about the Fed rate cuts, which is expected. Of course, tonight also we'll be seeing Fed rate cut outcome. So, what are you estimating? 25 basis points, and of course, for December also, anything that you are projecting?
25 basis almost seems to be a done deal for today
Yeah.
by the Federal Reserve. And I think another 25 basis point is likely to come through in December. But more importantly, the point to note here is the quantitative tightening, which the US Federal Reserve started a couple of years back, wherein the balance sheet had peaked at $8.9 trillion for the Federal Reserve because of the COVID pandemic extension of balance sheet. That balance sheet has slowly come down from $8.9 trillion to $6.7 trillion as we talk. Their initial aim was to bring it down to somewhere around $4 to $5 trillion. But the Fed governor recently spoke about putting an end to quantitative tightening and stating that the factors which are prevailing right now does not allow the Federal Reserve to continue with the quantitative tightening, and which means that a lot amount of liquidity is going to be made available in the system along with the rate cuts. This too extremely augurs well for US equities, because we have seen end of the day when liquidity is there, valuation hardly matters. And when the liquidity starts drying up, that's where we come back to the valuation standpoint. So it's going to be a very, very interesting thing from the Fed side. But at least 2 to 4 rate cuts over next 6 to 8 months are on the cards. We have seen the dot plot. Just a caution here, the dot plot chart keeps changing very frequently, which should be unlikely for a large central bank like Federal Reserve. But we are now getting used to how they keep changing the dot plot. But conservatively, I think even if we are to get like 3 rate cuts by June of next year, plus a stoppage of quantitative tightening, that is good enough liquidity for global emerging markets to be supportive of.
Okay, Kunal, now that you mentioned that IT could also see some better reversal from here on, and of course banking space is something also you're quite positive on. Does this also solve the FII problem then?
It's a tricky issue because there are other markets despite the run-up. Europe is cheap despite the run-up. We have seen Spain yesterday crossing the 35-year high finally, which was there in 2008. Now it has finally crossed that level. I think so. There is a lot of valuation gap between India and some of the other developed markets as well as some of the other emerging markets, despite Indian equities not doing anything over the last 12 to 14 months. Valuations continue to be high. I think Jan quarter, we will see a reasonable earnings uptick, and that should prompt the FIIs to come back to Indian equities. Till then, we are going through a phase of not just time correction, but uncertainty as to how much EPS growth can come through. Because this is, I think, the fourth quarter where the earnings growth is in single digit, the PAT growth likely to be again a single digit for this season. But given the GST rationalization, income tax cut which came through in last budget, and so many things which the government is doing to push the economy higher and higher along with RBI, I think next 2 quarters we will have a much better earnings growth, and that should pave the way for FIIs to come back. And
okay.
just one more point, the trade deal has to go through.
Okay. Kunal, you mentioned a whole range of sectors that you're quite positive on. Tell us something that you're cautious about at this point of time.
Cautious about metals right now. We are cautious a little bit about autos as well, because the valuations we have seen jumping up. So we understand that there has been a very high range of sales that has taken place in the last 2 months because of rationalization and festivities. But I think a lot of those positives are getting priced into the auto stocks, and that is one sector we will be a little careful about dipping right now.
Okay, all right. Kunal, what about the primary markets? I mean, we did see a lot of exuberance there as well compared to the secondary markets. But right now you're quite, bullish on the secondary markets as well. So tell us more about, how the FY26 and of course the second half of the FY26 would look like for the market construct going ahead, and what are the key factors that would drive the re-rating going ahead?
Factors are positive for India for second half. As I said, starting from February of 2025, the union budget was quite good. The fiscal deficit has been kept in check by the finance minister. Finance minister has done a tremendous job in bringing down the fiscal deficit from 6% level to 4.5% levels. So that goes very well with both domestic investors as well as global investors. Secondly, the income tax cut, which adds almost 1 lakh crore to the kitty of consumer, whether it is going into consumption or whether it is going into savings. That will always be a point to debate. But again, 1 lakh crore coming into consumption is something which we'll think of. Monetary policy, RBI, which has been very, very supportive from start of the year by giving almost 100 basis point of rate cut, adding almost 9 lakh crores to banking system liquidity, and doing everything to manage the rupee well in such an uncertain times is working really well for the economy. And on top of that, now we have seen the GST rationalization, which is putting more money in the hands of consumer. So all this put together, domestically, we have got very good levers in place to support earnings growth over next 2 quarters. But as I mentioned earlier, the valuations are not on our side. Some of the other markets are well placed related to us, despite the run up of those markets compared to India in last 1 year. The trade deal uncertainty is very big problem for us, and I think once that gets sorted out, we will be doing much better.
Okay. All right, Kunal, with that, we have to let you go. But thank you so much for joining and connecting with us.
Thank you.
All right, now let's go across to my colleague joining from the Mumbai studios, Yatin Mota. Yatin, good afternoon. A good day for the markets. Positive start to the November series. Nifty steady above that 26,000 mark then.
Absolutely, and what a day it has been for the markets. Across the board, we have seen buying. If you talk about the large cap stocks, we have metal stocks shining, PSU banks moving, Reliance Industries and HDFC banks of the world also doing well. So it has been a very strong momentum for a few of these frontline stocks. If you talk about the mid-cap end of the market also, very stock-specific result reactions are also coming in. So I think the result season so far has been satisfactory. The GST cut related demand has been good. So I think overall the market picture has changed. In fact, Lovisha, today morning we had a statement coming in from President Trump. He says that Modi is a great leader, and he would like to strike a trade deal with India very shortly. So I think that also lifted overall sentiments for the markets. And yes, it is somewhat also short covering led rally which is coming in from the FI desks.
All right, so it looks like the levers are in place for the Indian markets to get to the all-time highs levels as well. But yes, let's get in some individual movers of the day. We'll talk first about TVS Motors. The stock was in focus today after the company reported a steady set of performance both on the top line and bottom line basis. But margins were amiss, and that's why the stock saw a negative reaction today, saw a pressure of about 1% decline. But number-wise, if you look at numbers, revenues grew by about 29% on a year-on-year basis. Net profit also grew in strong double digits for the quarter. And the company also reported its highest ever quarterly EBITDA, and margins though expanded by 200 basis points, but it was short of street estimates by about 2%. Having said that, the brokerages remain bullish for the automaker. Jefferies did keep a buy call on the counter with a target price of about 4,300 rupees per share. Analysts said that though the second quarter EBITDA and PAT growth were in line with estimates, but EBITDA was flattish from a sequential basis, and that's what kept them a little conservative as well. Nomura also gave out a buy call on the counter, and they forecasted another 10% upside. And Motilal Oswal also upgraded the stock to about buy call, saying that the management expects that the two-wheeler demand momentum is expected to sustain throughout the second half of the fiscal year as well. It also said that given the stock has seen consistent market share gains across the domestic and export segments, so this will help sustain its premium valuations over the next couple of years. So Yatin, good performance for TVS Motors. Brokerages continue to share buy calls, but the stock was down today.
Yes, TVS Motors results were broadly in line with expectations, but one thing which the management said that the rare earth magnet issue might impact production. That is where probably we could see some slowdown in production and hence the volumes. But yes, overall, it has been a wonderful rally for TVS Motors. They have been talking and delivering, a lot of things. But yes, that rare earth things and the magnet issue still hounds the production for TVS Motors.
All right, all right. That is something that we need to watch out for as well. All right, let's move on and talk about Shree Cements as well. The stock did well today. 2% gains came in for the counter after the company posted strong second quarter performance. We did see that the profit has nearly trebled and revenue also rose in strong double digits on an annual basis. However, brokerages, they gave a mixed verdict on the counter. CLSA gave out a outperform call. Citi also shared a buy rating, but Choice Broking, they shared a sell rating on the counter. Now, what the analyst voiced was that the company's value over volume growth needs to be moderated at some point of time, because right now the company has been focusing more on premium products to get the fatter profit margins. In fact, now high margin products make for about 21% of Shree Cement's sales compared to about 18% a quarter back. Now, at the stake of the sale of these high margin products, there has been a sequential fall of about 2% in realization because the costs have got bumped up and volumes have also seen an impact. And that is what the street has been a little concerned about. Yatin, if you look at the stock did well. October, however, it's a seasonally weak quarter for the cement sector on the back of the festive season. So, volume trends is something that we need to watch from here on.
Yes, absolutely. And I think the GST cut benefits, how really does that impact pricing, how really overall basis the cement companies move, because second half is a busy season and because of the GST cuts, what kind of volume benefit do the industry get is something we'll watch out for. But yes, the brokerages are hopeful that volume growth will pick up in the coming months.
Okay, all right. We'll be watching out for cement sector as a space as well. Now, let's move on and talk about Blue Dart, one of the top buzzers today, given on the back of its September quarter performance. We did see that the number-wise net profit has risen by about 31% on a year-on-year basis. Revenue rose by about 7% on a year-on-year basis. EBITDA also increased by about 15% and operating margins also improved to about 16.3%. Looking ahead, the company has also remained quite optimistic, and they said that the third quarter is typically its strongest given the festive demand and year-end shipments get on going, and that's why they believe that the second half of the fiscal year to be a relatively stronger one compared to the first half. Remember that the company had also announced an annual price revision of about 9 to 12%, which was effective from January the next year onwards as well, to offset the cost inflation and maintain the service quality as well. So that numbers also we'll be watching out for. But Yatin, stocks saw some good volumes today. 20%, nearly 20% gains came in for the counter, and more gains could be likely on the back of the festive season.
So more gains could be there, and Lovisha, the company recently announced the price hike also for their customers. Q2 was quite strong, obviously on the back of festive season, general demand moving in, margin expansion was also seen for the quarter versus expectations. The results were better, but yes, the price hike probably will increase the overall earnings growth for the next 1 or 2 quarters at least. But then we'll watch out for the entire volume growth picture. But yes, very strong numbers for Blue Dart, and hence a 18% uptick coming in. But Lovisha, let me draw your attention to the mutual fund industry and the brokerage industries, which was sulking in trade. When the markets are hovering around that all-time high level, result season is going on full swing. We have the AMC companies, which were down on an average 5%, brokerage stocks down 10-15% intraday, on the back of the rule change that SEBI has proposed in its latest consultation paper on TER, which is the total expense ratio. Now, total expense ratio is something that mutual funds incur, and they pass those costs to the customers, which is basically the investor community. With capping coming in and reduction in TER ratio proposed, this move will essentially benefit lakhs and crores of investors which are associated with the mutual fund industry. Essentially, SEBI is proposing almost up to 15 basis points cut in TER ratio for open-ended funds. For closed-ended funds, this amount would be nearly 25 basis points. Not only that, SEBI says that the statutory charges, which is STT, stamp duty, etc., should be kept out of TER ratio, and also brokerages need to cut down on the cost. Right now, the brokerage fees on mutual fund is around 12 basis points for cash trades, which SEBI says it should be around 5 basis points. And for F&O trades, currently it's about 2 basis points upwards. It should be 1 basis points. Essentially, SEBI is also looking to cut broker cost, because research is the duty of the AMC. You cannot double charge investors for research fees and AMC fees, which ways the AMC charges to investors. So a welcome step from SEBI, was in the offing for quite some time. Finally, the discussion paper is out, and hopefully the capping on TER ratios gets more transparency in the marketplace, benefits investors. However, there could be a short-term earning impact of 10 to 15% for most of the AMCs and brokerages.
Great news for mutual fund investors as well, given that the SEBI's consultation paper. Of course, it's just a consultation paper, and of course, the industry will also get back to it. But yes, that's all the stocks we have for today. But yes, tonight we will be also watching out for Fed's rate decision. Of course, the consensus on the street is for a 25 bips rate cut, but Powell's commentary for December and way ahead will also be watched out. But yes, with that, we have come to an end of this edition of Closing Bell. But before I let you go, let me once again introduce you to our Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So now you can download the Moneycontrol app today itself and subscribe to Super Pro.